upbeat on India and has been consistently increasing investments in the country. Over $1 billion expected this year as well. Rohit Sipahi Malani of Temasek tells CNBC-TV18 that India is an attractive market and his fund is positive on consumer-related sectors including insurance, IT, pharma and fintech. Listen in.
I think we have been consistently looking to move our portfolio in favor of sectors that we see having secular trends. And India falls in that bucket because India does have a growing middle income population, which is where the consumption themes come into play. India does have globally competitive companies in sectors like pharma and IT, which is our theme of emerging champions and global champions. So clearly, India is a core part of our strategy. And as I said, we've been steadily increasing our exposure over the years.
All right. Any new sectors that you're adding in India? Because IT, healthcare, consumers, these are darlings of most of the private equity players. You have some investments in e-commerce as well, some in energy. Any new areas that you're looking at? Any particular reason for that tinkering that you are going to make for India?
So 5 years ago, our portfolio in India was primarily banks and telecom. Today, we are much more diversified, right? I told you globally we're trying to have more of tech, insurance, life sciences, which is really both healthcare and pharma and consumer. And those themes are true for India also. We're looking to increase our exposure in all these subsectors in India, and we have steadily been doing that.
And what about banks? Of course, globally, Standard Chartered Bank is something you have so much exposure to. Do you see something like that in the Indian banks as well? Or have you consciously been out of the FIGs? Not so much insurance, but the rest of the FIGs?
Actually, banks have consistently been an active part of our portfolio and continue to be. So even right now, most of the larger banks are more public market positions, but we do have exposures to ICICI Bank, Axis Bank, HDFC Bank. And so banks always do form a core part of our portfolio out here. Now, obviously, we look at it in the context of valuations, when they're attractive to buy and when we may trim our exposure at times when we think that valuations are run up too much. But we do see banks to consistently be a part of our portfolio out here in India.